Understanding knowledge capital, the hidden asset of organizations. Knowledge capital has emerged as a vital concept in today's competitive business landscape, referring to the intangible value generated by an organization through its collective knowledge, relationships, learned techniques, and innovations. While most individuals associate capital with financial assets, knowledge capital illustrates that value can also arise from non-tangible sources. This article delves into the details of knowledge capital, exploring its components, importance, investment strategies, and real-world applications. The essence of knowledge capital. In essence, knowledge capital encompasses everything that makes an organization unique and effective, including expertise and skills, the qualifications, experiences, and talents of employees. Innovations, new ideas, products, processes, or technologies developed within the organization. Relationships, the various connections between employees, customers, suppliers, and other stakeholders. With the rapid advance of technology and globalization, organizations today are increasingly recognizing the importance of knowledge capital as a key differentiator in achieving a competitive edge. Companies with a robust knowledge base are often more agile, innovative, and adept at problem-solving than their competitors. Key takeaways. Knowledge capital is an intangible asset consisting of the collective knowledge and relationships within an organization. It provides companies with a competitive advantage and can significantly contribute to profitability and productivity. The components of knowledge capital include human capital, relational capital, and structural capital. Investment in knowledge capital is crucial as it can depreciate over time. Components of knowledge capital. Knowledge capital comprises three essential components. 1. Human capital. Human capital refers to the skills, talents, and expertise that individual employees contribute to an organization. Unlike physical assets, human capital is not owned but rather resides within employees. Organizations must focus on retaining skilled workers and creating an environment conducive to skill sharing and learning. Strategies to enhance human capital include employee training and professional development, leadership development programs, employee engagement initiatives to promote collaboration. 2. Relational capital. Relational capital encompasses the network of relationships both within the organization and with external partners, such as customers, suppliers, and collaborators. Strong relationships can provide several advantages. Access to critical information, enhanced cooperation and reduced risks, opportunities for expanding markets and resources. Organizations can foster relational capital by investing in customer relationship management, CRM, systems, strategic partnerships, and team-building initiatives. 3. Structural capital. Structural capital includes the non-physical assets that support and enable an organization's operations, such as processes, methods, intellectual property, IP, and proprietary technologies. It serves as the backbone of a company, promoting efficiency and consistency. Documented processes and workflows. Databases, software, and technical documentation. Patents, trademarks, and proprietary knowledge. Investing in structural capital can lead to improved organizational processes, innovation, and competitive edge. Investing in knowledge capital. Investing in knowledge capital requires a commitment of time and resources. Notable investment strategies include recruitment, hiring a diverse workforce that brings different skills, perspectives, and backgrounds. Training and development, providing ongoing education and training opportunities to keep employees' skills current. Research and development, R&D, allocating resources for innovation and the development of new ideas or products. Cultural investments, cultivating an organizational culture that values knowledge sharing and collaboration. Understanding that knowledge capital is not finite is essential for organizations. Companies should aim to create an environment where knowledge is continuously exchanged, updated, and expanded. This not only enhances individual capabilities but also builds the overall knowledge base of the organization. The importance of knowledge capital. Organizations that prioritize knowledge capital can reduce inefficiencies and leverage their existing knowledge to enhance decision-making and problem-solving capabilities. Being equipped with documented processes and knowledgeable personnel minimizes the likelihood of reinventing the wheel for every project, thus speeding up execution and reducing operational costs. Moreover, a rich knowledge environment can lead to innovation, one of the primary drivers of business growth. Knowledge capital facilitates the exploration of new business models, product development, and market expansion initiatives. Real-world applications of knowledge capital. Knowledge capital can take on various forms in organizations, influencing both strategy and execution. Here are a few notable examples. Corporate leadership. Strong leadership can drive collective knowledge toward common goals. Technical expertise. In tech startups, coding and programming knowledge become critical growth factors. For example, an engineer's ability to develop advanced algorithms can set a company apart in a saturated market. Brand innovation. The conceptualization and design of iconic brands, like the Nike swoosh or Apple's logo, are products of extensive knowledge capital, showcasing creative and strategic thinking. Understanding how knowledge capital operates within these realms emphasizes its potential as a multidimensional asset. Conclusion. Knowledge capital represents a critical yet often overlooked asset in the modern business landscape. Organizations that recognize and invest in their knowledge capital can gain a distinct competitive advantage, foster innovation, and create a more efficient and cohesive workspace. As businesses continue to evolve and face new challenges, leveraging their intangible knowledge capital will become increasingly fundamental to achieving sustainable growth and success.